This is Bix Weir with roadtoruta.com. This presentation is about solving the problem in silver right now. The problem in silver right now is that the markets aren't freely traded. People are losing faith in not only the markets, but in their government's ability to regulate and oversee markets. And it is very clear that the larger traders have full control over the markets and do anything they wish to rig and set the price. It's in full view of everybody within the silver market, and yet the CFTC, the SEC, and the federal government are doing nothing to stop this practice. In the meantime, the Asian markets are building from the ground up a viable physical market in gold, and they have plans to build a viable physical market in silver, which will be freely traded markets. And it seems a little odd that the United States cannot allow freely traded markets, and yet Asian countries have no problem doing that and are trying their best to get to a point where we do have a freely traded market in gold and silver someday at some point in time. Having said that, I do think the United States can return to a freely traded market. But in order to get there, we're going to have to stop the power and the manipulation of the large traders of gold and silver. But I'd like to mainly talk about silver because it is the most manipulated of all the markets. So these are my 17 requirements for a freely traded silver market structure, which can be implemented by the U.S. regulatory agency over commodities, which is the CFTC. And I would be happy to help them do that if they are looking for help, if they can't figure this out on their own. Now, I would like to point out that these 17 requirements for a freely traded silver market will be vehemently opposed by the large silver traders because it is the ability of them to exploit these problems with the market that gives them the power to rig the prices. And that's what they intend to do at all times until these problems are fixed. So let's just go quickly through the 17 requirements. Number one, end excessive concentration. There is just a handful of traders that control both sides of this game, mainly the short side. The commercial net short position right now is 100,000 contracts or 500 million ounces of silver net short. Now, that's not the trades that go on every day. That's not volume. That's the end of the day position. And there's no reason that such a small concentration of players, mostly the people who were busted for manipulation of the LIBOR scandal, same traders are in gold and silver. So that needs to end. Number two is to require public disclosure of all positions. Now, the large traders will hate this because they think of it as a proprietary knowledge that they know their book and nobody else knows their book because it limits their ability to hide where they stand. If we are going to have a freely traded market in gold and silver, we need to know where everybody stands at all times. There is no more rigging the markets with secret positions of silver hidden from view from everybody else. This may sound radical to these large traders, but after 100 years of market manipulation, I'm sure that the people would like to see some truth and honesty back into the market. So yes, they should all expose where they are and to see who has these gigantic short positions and why are they trading them. Number three, verify, certify physical metal backing. If you're going to have a short position, a hedge short position, then it needs to be verified as to why you hold that position. Who is it that you're holding it for, or are you holding it for yourself, and what is the purpose of that position? If it's just for being a market participant and has no real meaning other than trading, that would be fine, but it shouldn't be a monster position. It shouldn't even be very big at all if you're a trader. You shouldn't trade on excessive concentration in any which way if you're going long or short. So those who claim to be real hedgers should verify and certify where that metal is being held and that they are the only owner of that metal. Number four, physical reconciliation audit. There is so much fake gold and silver out there. People who hold gold bars, for example, never, ever, ever drill into them and find out if there's any tungsten inside of them. Same with silver and molybdenum. It is insane that that doesn't happen, because with all the testing techniques, especially the scratching the bars, I mean, it's just the top few millimeters that is tested. Even the radar penetrating sonar new technologies can't get past that first level of, if it's thick enough, of gold bars. So you do need to drill into them and make sure they're solid gold. Number 5, analyze significant price action. Gold and silver are very small markets. Silver especially. Silver is a tiny market, and the supply and demand does not really vary that much at all every year. I mean, if you look at the amount of silver available, it maybe goes up or down, maybe 5%, but the price gets jacked around like it's unbelievable. One of the most volatile commodities in the world. Why is that? Who is it that's buying and selling? What did they do during that price slam? And did they do it to cause the market action? These things are very, very easy to prove by the CFTC if they properly analyze who benefited from the big price moves. Number 6, audit past manipulative maneuvers. Yes, the drive-by shooting on May 1st in 2011. It was so obvious what was going on, and yet there was no audit of what went on. Nobody checked what JP Morgan and friends were doing. Bill Daley, who was the head of the SWAT team for Jamie Dimon, that's what they called him, at least on the cover of Fortune magazine, was put as Barack Obama's chief of staff during this period. It was clear that he was orchestrating this whole thing. So yes, there should be audits into the past manipulative maneuvers. Just because you got away with a crime at the time doesn't mean you should always get away with that crime. We need to audit, verify, and certify approved warehouses. The same people that are rigging the silver market are owners or part owners in these approved COMEX warehouses. It is criminal what is being done because they lie, cheat, and steal. They'll, ship metal out the back door and just bring it in the front door and say, "Oh, look, we got more inventory." Those need to be audited, certified, and verified by the CFTC. They need to get control of what's going on in the physical market. And again, audit, certify, and verify physical metal hedges. Are these real hedges? Very, very few silver miners are hedging metal. So what is the purpose of all these shorts that are being put on? Is it a authentic hedge, or is it someone just trying to rig the price? I believe it's someone trying to rig the price. And most people in the silver market see that the price is rigged. So what are these hedges in place for? And that should be audited, verified, and certified. CFTC needs to get their hands dirty, go out to the warehouses, go out to the companies who are doing these hedges and see the metal. Make sure it's there, make sure it's real, and not just some paper game that they're playing. Number 9, remove ETF physical substitution. Unbelievably, the CFTC and COMEX allows shares of ETFs, SLV, and GLD to be substituted for physical metal delivery. Are you kidding me? If you've read the prospectus of both SLV and GLD, you know those are not physical shares. There's not 1 ounce of physical for every share that is listed and put out by these ETFs. It is a criminal enterprise, and for the COMEX to allow substitution, it's allowing paper substitution for metal, and that should be outlawed instantly. Investigate collusion between large traders. We've seen it in every other market. In every other market that these traders collude. We've seen it in the Deutsche Bank emails back and forth with silver traders when they admitted that they were colluding to rig the markets. This is a known fact, and yet the CFTC does not check the correspondence between the large trader at any time. Phone calls, it should be phone calls, emails, even personal meetings should all be recorded if we're going to have a free market, because these guys will lie, cheat, and steal behind your back. Compare volatility to the supply-demand dynamics. Believe it or not, physical silver is one of the most stable industries in the world. I said it, the most stable industries in the world. It's very rare that the production or consumption of silver changes more than 2 or 3% a year, and yet the prices all over the board can drop 75% in the blink of an eye. Why is that? Does that sound like a freely traded market, or does it sound like a manipulated market? It is a manipulated market 100%, and the CFTC allows it to happen right in front of their face. Number 12, employ experts to regulate gold and silver markets. The CFTC does not have a silver expert working for them. They have admitted it many times. I've called them. I said, let me talk to the person who's in charge of silver, of monitoring silver. And they say, oh, you can talk to an economist. And I said, I don't want to talk to an economist. I want to talk to someone who knows anything about the silver market. And they have nobody employed at the CFTC who is an expert on silver. Get Ted Butler into the CFTC. He would work for free. But they're not doing it because they let the silver manipulators run wild, and that's got to end. So when it does end, and if they do want a freely traded silver market, the CFTC needs to hire experts in both gold and silver. My suggestion, Ted Butler for silver, Jim Sinclair for gold. Number 13, engage outside expert consultants. Again, the CFTC relies 100% on their internal experts, and they have no internal experts. There are tons of gold experts out there. There's tons of silver experts out there. Go spend the money for a couple $1,000s. You can get an expert opinion on whether or not these markets are rigged. If the CFT is not going to hire internal experts, they need to go outside and get expert consultants. Number 14, control gold and silver derivatives. Unfortunately, derivatives is what sets the price for gold and silver now. Completely against commodity law, but it's what happens. And there are so many gold and silver derivatives, from longs and shorts and options and swaptions and swaps. You name it, they are completely out of control. There's no regulation on the OTC market, over-the-counter market. The CFTC, if you want to have a freely traded silver market, you need to get control of all the derivatives on gold and silver that are traded. It is criminal what is happening, and you're letting it happen. Number 15, ban high-frequency computer trading. Yes, ban it. It should have been banned in every single exchange. These trades are not ever executed. There's no contract signed. There's no ownership signed over. There's no execution of signed documents. These are not real trades. These are phantom trades meant solely to rig market prices and skim money off the top and drive the price up or down wherever the manipulators want to go. High frequency computer trading, especially in a physical commodity market, should be banned the moment they want free markets. Right now, the world doesn't want free markets. The moment they do want free markets, you ban all high-frequency computer trading and make sure that every trade is properly settled before it's sold. So you're going to have to exchange documents, you're going to have to sign contracts, and you're going to have to change ownership of that underlying asset. If we want free markets, that's the way it's got to go. Number 16, daily volume limits and public disclosure. This is what I jump up and down about all the time. It's not the commitment of traders. It's not where they stand at the end of the day when reporting to the CFTC. It's how many trades go on every day that sets the price of silver. And that number's over 300 billion ounces per year are traded every day on the electronic markets, at the COMEX, at the LBMA, and at some of the over-the-counter markets. Over 300 billion trades of electronic silver derivatives. That is insane. There needs to be limits on how much speculation or manipulation will be allowed. And number 17, this is the obvious one, CFTC employment restrictions. You can't hire criminals, and then after someone has worked at the CFTC, they can't go out and get a cushy job. This is such a common sense type of regulation, and yet nobody employs this. The CFTC, the SEC, criminals come and criminals go. And until that is fixed and changed, we should expect to see rigged prices and our country be destroyed from within. It's very sad, but it is happening, and we need to stop it. My name is Bix Weir, roadtoruta.com. Sign up for free updates on this information and more, and you get a free PDF book when you sign up at my website, roadtoruta.com. And this needs to change, and if we're going to change the silver market so it's freely traded, so we know how much silver is really worth in a fair market value trade, we need to implement some, if not all, of these 17 recommendations. Again, my name is Bix Weir, roadtoruta.com. Don't forget to subscribe to this video and send it to friends.